Hi, everyone. This is a video run-through for the Queens of Athleisure case. This is a great competitive response case with a strong focus on qualitative reasoning, including chart reading and brainstorming. My name is Chris Macrae Ham, and I'm going to be leading the interview. Also with me is Alvaro Bardalez, who will be playing the interview candidate. Before we dive in, let's just do some quick intros. As I mentioned, my name is Chris. I now work in renewable energy, doing M&A work in New York with a company called Energy Re. Before that, I worked in management consulting and was with BCG in New York for 3 years, with the last year of that time working as a project leader in BCG's climate and sustainability practice. Before that, I was in Accenture strategy in London, working in their energy department for a year. So overall, I've spent about 4 years in management consulting after doing my MBA at London Business School. Before business school, I was an engineer in the oil and gas industry. Alvaro, do you want to give a quick intro?
Yes, Chris. Hello, everyone. My name is Alvaro Bardalez. I currently work at corporate strategy at Walmart in the Mexico City office. Before that, I was a senior business consultant at Accenture Strategy. I worked at Mexico City office for 2 years, and before that, I did a summer internship at Kearney, mostly working in growth strategy projects and a couple of experiences doing post M&As. There you go, Chris.
All right, great. So before diving into the case, I'm going to slightly simulate the case transition that you might see in an interview and ask one quick fit question. Good to go?
Let's do it.
All right. So, Alvaro, it's great to meet you. I have your CV in front of me, and it looks like you have some great prior experience. What's making you want to move into management consulting?
Thanks for the question. I have a couple reasons for trying to get into management consulting. The first one is I want to have broader experience, business experience to be specific, because as you can see in my CV, most of my experiences is in CPG focus on operations. So what I need to do in order to grow at my career is to expand my business knowledge and understanding different business contexts and situations. And this is the first reason what I want to do is in business consulting. The second one is because I want to get a little bit more of a specialization in the CPG and retail experience with this broader experience that I mentioned before. So after having some exposures into management consulting, I'm looking forward to getting into more of this CPG and retail experience in order to get more expertise and also be on the top of my game on those two industries.
That's great. That makes a lot of sense to me. I had some similar reasons myself, especially about the business exposure.
Perfect. Amazing.
Ready to dive into the case?
Yes, let's do it.
Okay, great. So here's the case question. Your client is Lululemon, the global athleisure powerhouse that, as of 2023, generates $9.6 billion a year selling high-quality athletic apparel and clothing designed for yoga, running, and other fitness activities. So Lululemon's revenue is up from just $4 billion per year in 2019, which represents a 25% CAGR in that time. More recently, however, Lululemon's growth rate has slowed, with Q1 24 sales up only 3.5% versus 2023. So the leadership at Lululemon has hired your firm to find out what is happening and to get growth back on track. How would you approach the situation?
Okay. Before giving you my approach for this case, I'd like to clarify the challenge. The challenge here is this 3.5 year-over-year growth that Lululemon had in this past quarter results compared to the 25% CAGR that they had between 2019 and 2023. Having said that, the question or the challenge here is how Lululemon, or how we laid out a plan for Lululemon to get back to this double-digit growth. And have a couple of questions in order to give you my framework.
Yeah,
What
that
is
sounds great.
Lululemon aspiration? Are they looking to growth at a 25% CAGR on the coming years?
Yeah, good question. I think ideally they would want to get back to 25%, but they recognize that's a pretty, tall order. That's a bit challenging. So the growth rate they're looking to get is a little lower, about 15% CAGR.
Okay, perfect. This is good to know. My second question is more on market dynamics. Can you provide a little bit more flavor on why Lululemon is seeing this challenge? Probably, I don't think it is, but probably they are seeing more that overall market growth is plateauing, or maybe new competitors. Can you provide a little bit more flavor on that?
Yeah, it's a good question. So the context I can give is after the pandemic boom, new entrants were targeting athleisure because it was a very profitable and high growth segment. So the market has now seen an influx of new competitors. And some of these competitors are focusing on digital first sales. Some are focusing on brick and mortar distribution channels. But yeah, for instance, in Q4 of 2024, there were several competing brands that were reporting double-digit growth. So this is indicating a potential shift in consumer preferences.
Okay, perfect. I think that with this information, I can provide a framework in order to address this Lululemon's challenge. Just give me a couple of minutes, please.
Yeah, sounds great.
So I laid out this framework to answer this specific question: how can Lululemon grow at 15% or double-digit growth in the coming years, having this context in mind that they are mostly, their sales have plateaued at a 3.5% level. So this is the challenge that we will address here. In order to understand what is best strategy for Lululemon to grow at this 15% year-over-year basis, I laid out this framework with 3 buckets that I'd like to analyze. First one is the market dynamics. Second one is the customer preference. And the last one is revenue sources and revenue investments that Lululemon have done in the past years. Talking about the market dynamics, I'm very interested in the market size and market growth. The second is the competitive landscape. You already mentioned some information regarding new entrants, but I'd like to know what is the communication efforts that they are doing, the commercial strategy, how are they positioning, and how is that hitting Lululemon? And also some trends regarding the market, probably some channel switch that you mentioned, probably some regional switch or regional dynamics there. When understanding the customer preferences, I like to know what are the market segments that are growing, and also what is the rationale behind that, like new categories, new products, new preference regarding the customer. And as far as I understand, Lululemon has a high penetration on e-com sales, so probably we can have some sentiment on Lululemon's value proposition regarding some customer surveys and some customer feedback. And the last bucket is the revenue source and the revenue investment. What are the largest revenue pools from Lululemon, and what are they investing? Where are they putting the money in terms of marketing and innovations and product development is good to know. Having said that, why don't we go from top to bottom? Do we have any information regarding markets, market size, market growth about Lululemon in order to address this challenge?
Yeah, that's great. I really like the framework. It's meaty, and I like this idea of diving in right from the top. So yeah, to address that, I'm actually going to share my screen. I have a chart that I'd like you to take a look at for me here.
Just let me understand what are we analyzing here. So this is quarterly revenue change, just focus on US and Canada. I imagine that most of the revenue for Lululemon comes from these specific regions. Am I correct?
Yeah, that's a good insight. We're looking at about 75% of the company's revenue coming from these markets, so it's a good proxy for the company overall.
Definitely, definitely. Now let me understand the graphic here. Okay, so the analyzed period is between 2018 to 2024. I'm seeing that before COVID, Lululemon had an average year-over-year growth of 20%, which is slightly below the 25% CAGR that you mentioned. Obviously, they had a hit in COVID, but after that, what I'm seeing is they recover their sales. This is why they hit this 80 and 60% in Q1 and Q2 2021.
Mm-hmm.
And their growth was above pre-COVID levels. So they basically had a influx of customers in new sales. So they were trending.
Yeah.
And after that, in 2023, most likely we can perceive these new entrants hit in Lululemons because we see a declining trend starting in Q1 2023 below their pre-COVID levels. So my guess would be to understand a little bit more what is the market dynamics in this 2023 and 2024 period, which is the one that Lululemon had the most important hit.
Yeah, exactly. I think you're getting the point here. It looks like growth is starting to slow after COVID. So, yeah, we have a second piece that can help interpret that. Can you tell me what insights you're pulling from this chart?
Yes. So we are understanding the brick and mortar footprint here at a global scope for Lululemon and Vuori, which I believe is one of the new entrants that you already mentioned. Am I correct?
Exactly. Yep.
Okay. So we are seeing that Vuori is relatively small compared to Lululemon. This is something that I'd like to highlight. But based on the context that you provided, we should probably see many Vuoris here, not just one. So this is where the competitive landscape or the more competitive landscape that you said is coming from these new entrants. What is interesting to me is if we just analyze Lululemon, we are seeing that they are growing their footprint. So even though they're not selling or their sales are slowing, we can see that between 2022 and 2023, they have increased at least 10% their footprint, even though the sales, they had a sales slow in that period of time. And they're projecting to double their footprint from 2020 to 2026. So this is not an expansion issue. This is that the sales per store at Lululemon is slowing down. So they are less appealing for their customers. And in the case of this Vuori, they are accelerating very fast. You can see that they started or they entered into the brick and mortar market in 2020 with one store. And now they have 50 stores and they are planning to double the number of stores in 2026. So this is showing us that they are having some popularity with customers because of that level of growth. But to me, the most important thing here is that Lululemon is losing this appealing with customers because they are growing. Nevertheless, they are selling less per store.
Yeah, I think that's a great insight here, right? Lululemon, it looks like, we're projecting they'll double their store growth. from 2020 to 2026 and adding a consistent 60 to 80 stores per year. This one competitor, though, and they're one competitor of many that are out there, but they're looking at about 100-fold growth, like albeit from that very low base of one store. That's great. So I guess moving on from this point then, after a heated leadership meeting, Lululemon has turned to our firm and they have a simple question, which is, how can we beat these new entrants? I'm hoping that we can brainstorm some potential solutions for the clients here.
Okay, perfect. Then let me provide a little small framework here in order to make this brainstorming more effective. Give me a couple of minutes, please.
Perfect.
So I'm thinking here 4 ideas for Lululemon in order to better compete with these new entrants.
Mm-hmm.
The first one is strengthening their core, given that they have this strong branding and a strong value proposition that has been successful across many years.
Okay.
This will be first bucket. The second one is leverage their brand and their scale in order to be more effective at their sales. This is more a commercial one. The first one is more a rebranding and repurposing their marketing message. The third one is expanding their presence. If we see market growth and market size, probably they are not addressing or they are not growing where the market is growing. So expand their presence to have a more organic growth in trendier regions categories. Mm-hmm. And the last one is acquisition, a bold move to acquire one or several of these new entrants and strengthen their value proposition with more of a market or a brand portfolio and not just focusing on Lululemon.
That's great. No, I love these ideas. I think we have a set of 3 at the top: your branding idea, the cost-cutting idea, and then expanding your presence. These are really competing with the clients, right? Direct competition. And then as an alternative, the last piece is this idea of an acquisition. Just pick up some of them. We have the scale, we have the balance sheet, we can pick up some of these companies.
Definitely.
Yeah, no, amazing. That's great. So I guess moving on then, given the environment, the partner on the team is wondering if growth is even the correct way to be framing this goal for Lululemon at all. So as an exercise, I guess as a brainstorming continuation here, what do you think would be different about the company's approach if the goal were changed to maximizing market share or maximizing profitability? So instead of just thinking about this idea of growth of the company, let's contrast that goal with market share or profitability. And then I guess at the end, give me a sense of what you think the best goal would be.
Perfect. So I laid out this framework, and in order to see or to understand what would be the best approach between growing your sales, gaining market share, or increasing profitability, my answer would be depends on the market context. And why is that? If we have a growing market, the best way to move forward and for Lululemon to grow is basically understanding what are the customer preference and understanding the trends, because there will be market for everyone. And with the Lululemon's brand, probably it makes a lot of sense to keep growing. The second one is more of a zero-sum game, is when the market is more competitive because the market is not growing as fast as it was growing before. And now we need to think on what is our competitive and our value proposition, how do we outsmart or outcompete the market in the revenue pools that are growing the most? Or the second one would be, what are the tactics and commercial strategies to position? And I think that Lululemon, given the strong balance sheet that they have, is very well positioned to make some investments and probably to let these competitors play, and probably some of them will close or will go bankrupt because Lululemon can receive a larger hit given the value proposition, the balance sheet that they have. The last one, which is the profit one, is when the market is more mature. I'm seeing here more sluggish growth, like 1%, 3%, no more than that. And probably it would make more sense for them to understand what is the most effective way for their resource allocation.
Right.
Or, I mean, even closing some stores could make more sense because they wanna increase their profitability at a per store or per square meter or square feet basis. And
got it.
yes,
Yeah, that's clear.
Answering that, to answer your question, now that I have explained what is the difference between the three of them, my understanding is that we are more in this second level that I am mentioned, this zero-sum game for Lululemon.
Right.
Having said that, I think that for Lululemon, it would make more sense is understanding what would be the best commercial strategy, the best pricing point, the best assortment, the best categories where they are going to compete, match it with what is growing in the market, like the subcategories and the sub-regions that makes more sense, and investing at large because they have the financial resources in order to be successful at the market, and most importantly, the brand recognition.
Yeah. Yeah, no, that's great. I agree. I mean, I think across these three dimensions, you're right. If we focus purely on growth, the temptation would be to just expand into new markets and ignore these threats at home, in your core market of the US and North America. And that could have some very negative consequences. So yeah, focusing on increasing your slice of the pie when it's a zero-sum game is absolutely the right approach. That makes sense. Okay, great. So why don't we wrap things up here then? What is your final recommendation to Lululemon's leadership on how you would respond to this lagging growth?
Definitely. Just give me a couple of minutes, please,
Sure.
and I can give you my final recommendation. Okay. So, in order to understand, for Lululemon, to answer the first question, for Lululemon to regain growth at double digits, to be specific, at a 15% level, it would make more sense for them to focus on the North American market, on the US market, because this is where most of the growth is coming from, and to develop a targeted and specific commercial strategy for focusing on the categories and the revenue pools that make more sense for them to gain market share. Understanding customer preferences is key here because we are not talking about on a broad market perspective. We are talking here more on specific segments that are where this growth is going to come from. Have a aggressive pricing strategy, which is something that Lululemon can do very well because they have a strong balance sheet and position in the marketing channels that these customers are consuming. I would say it is more focused on digital commerce, but probably would make more sense to understand who are the influencers, who are the people who talk specifically to their needs and to their preferences. Then what I like to highlight is what are the risks here. The first risk is seeing that the Lululemon value proposition is not good enough for these new customers or these new revenue pools. So we need to understand and we need to assess where the brand is positioned right now and see if the clothing or the accessories that they are offering is appealing to these customers. Probably we saw a customer preference shift here that is not returning for a big chunk of the customer target. So we need to lay out a plan and to understand where are the customer preferences. This is the first risk that I see. And the second one is there is also a regional risk that we are not addressing, because since most of the revenue comes from the North American market, we can see some growth in other markets like Asia, for example. So we need to understand also that since this is a zero-sum game and we are positioning more in the North American market, there is a risk that we can lose some growth there. What are the next steps? I think that I already mentioned here, but first and foremost is understanding customer preferences, laying out an organizational plan in order to improve the commercial strategy of Lululemon, and with that in mind, focusing in this implementation of a revamped commercial strategy.
All right, wonderful. That is a strong summary. Okay, case over. Thanks, Alvaro.
Thanks, Chris.
So yeah, for just a little bit of feedback and debriefing on this thing, Alvaro, I think you did a great job on the case. I mean, talking through the different elements here, you started out with a really good framework. It was a strong MECE framework, and you used it as a jumping off point to launch into analysis, which is a great way to start off a case very strong. The first exercise here in chart reading, I think you did great. I mean, you started out by clearing the charts. You talked to the titles, the axes of the graphs, before you dived into, what is happening on the chart and starting to draw inferences. There were one or two times where it felt like maybe you were speaking a little slowly or taking a little bit too long to get to some of the insights, but in the end, you got to all of the key insights that we wanted to take from the graphs. So I think that was wonderful. The brainstorming was also very structured. You approached every brainstorm with a fresh structure that was very tailored to the question itself. And because of that, I didn't feel I needed to even push you to give me more ideas. If a candidate jumps into brainstorming right away and doesn't have a structure, I might start, pushing the limits and asking for another idea and another idea. I didn't feel like I needed to do that here. You came up with some great material right away. And yeah, lastly, the summary. I mean, that I think was a great example of how you can wrap up a case very strongly. It was a top-down summary, answer first, with the supporting bullets afterwards. You added risks, and then you had next steps that were very clear and linked to the risks that you identified. So, very strong beginning and finish to the case. I think the only nitpick I could add is that, maybe there's one or two places where you could have moved a little more quickly and gotten to the insights a little faster, but you got all the right points in the end. So I think that was a great performance.
Thank you
Anything
for
to add on your end, Alvaro?
No, Chris, thank you for your feedback. And I think that it will be very important for future or aspirant candidates for consulting to see this case and to understand it really well. I'm happy to share this space with you.
Hey everyone, it's Kenton Koveski here, the founder of Rocketblocks. Thank you so much for watching this mock interview video. I hope you found it informative and helpful as you are getting ready to prepare for your own interviews and hopefully landing that job offer you are excited about. We have a ton of great content on the Rocketblocks channel coming out on a weekly basis, mock interviews, mini lessons, and chats with our Rocketblocks experts. So if you haven't subscribed yet already, please do so. There is a big red button below. And if you hit that, you'll get all of our content as soon as it comes out. Thanks for watching and have a great day.